Ladies and gentlemen, welcome to the Impact Investing session, moderated by Cyril Gouiffes, Head of Social Impact Investments by the European Investment Fund, with the participation of Elemer Eszter, founder of Impact Ventures LT, Astrid Fockens, partner of Impact Partners, José Moncada, CEO and founder of La Bolsa Social.
So the topic of this session, we have 1 hour of a discussion, obviously also questions available for you in case you want to raise some. The overarching topic will be impact investing, social impact investing in particular, and to put that in perspective of the conference, which is about money, purpose and technology, try to illustrate through Astrid, Elemer and José's view, how do they invest in impact companies? What does it mean investing in impact companies? Are they any different from regular companies, if provided such a thing exists? Also, because it is about impact investing, one particular important matter in this respect is how do you measure, quantify impact? So that would be another point we would like to discuss. Is it simply, in the world of impact investing, is impact measurement simply a reporting tool, or should it be something more, something else? And finally, because often there is a French saying that says drawing is more effective than a long speech, we will try to shed light on impact investing through relevant case studies, success stories from your portfolios. So obviously you get to understand and a good understanding of what is impact investing, but also most important, what does impact investing mean across Europe? We are here in Thessaloniki, and we have different, you are investing on fairly different markets. So hopefully this will be illustrative and informative for all participants. Just very quickly, so I'm working for the European Investment Fund, and the European Investment Fund is part of the EIB group. You heard this morning the speech before, so I won't be long on that. I'm in charge of within our venture capital department, of our social impact practice. So we are acting as a fund of funds. So just to make things clear, we as EIF invest in funds, and funds we invest in companies. We do not invest directly in companies, and therefore we hope the composition of the panel will prove complementary here. I'll leave it up to the panelists to introduce themselves, but again, we hope that it will be an informative and dense session because Elemer, you invest mainly in Hungary, also elsewhere. You're based in Hungary. José, you're based in Spain, investing in Spain. Astrid, you're working for a management company that invests in impact companies in France, but across Europe. So off we go. Please introduce yourselves and look forward to an interesting session. Astrid, will you start?
Should I just introduce myself or also the company?
And Impact Partners would be good. Thank you.
So, yeah, can you hear me? Yeah. So I'm Astrid Fockens, and I'm actually partner at Impact Partners. So just to give you a little bit of background of Impact Partners. Impact Partners is a management company that has been founded in 2007. So at that time, nobody was talking about impact investing. We have a very clear purpose. We are really there to empower entrepreneurs to make our society more fair and more durable. And for that, we have 3 types of funds. The first one is what we call the local fund, which we have a few funds in that, but really the purpose of that is try to create jobs and companies in well, not companies, jobs and shops in deprived areas. So entrepreneurs that will actually create shops in deprived areas or in rural areas. So that's the first part, local. The second part is social. So I'm actually working for the Growth Fund. It's a social fund. So on that fund, what we're trying to do is fighting against social inequalities in Europe. So I think we will talk a little bit more about what social impact means after. And the third vertical that we have is green investing. So another, I think, thing to notice about our management companies is that we also have a team, the engagement team, which really helps to animate all our ecosystems. So yes, we do invest in impact companies, but on top of that, what we make sure is that we can help big groups and big companies to actually have to improve their RSE, ESG, and for that we put them in relationship with impact companies so that they can buy from those companies and achieve some impact. And we also have a program where we have some job dating with people coming from deprived areas or handicapped people, so to help those big companies to also be able to recruit from those typology of people. So voilà, that's what we do at Impact Partners. Important to know is we have 350 million euro under management, and we are located now in 5 countries. So last year we opened an office in Barcelona. We have 2 partners based in Barcelona now. We opened also an office in Frankfurt, where we have 2 people working out of that office too, and we have an office in Copenhagen where we also have 2 people there. So we really work as a European team on the same fund, trying to invest in Europe to be able to fight against social inequalities in Europe.
Thank you, Astrid. Elemer, will you introduce Impact Ventures? Thank you.
Great. May I ask the slides, what I already have given to you, if it's possible? Thank you so much. No, that's not me. The green one. Impact Ventures intro deck, that's the name of the file. Elemer Eszter.
You want to start?
That's one,
yeah.
Great, thank you so much. Okay. And it's perfect. Yeah, hello everyone. Thank you for taking your time and coming here to this beautiful city. And thank you for the organizer for the Alternative Finance Forum, which is, I think, an important thing. And after this COVID disaster, I'm happy that we can be here physically. It's a great effort. I know I see the masks. I hate the masks, but I'm really grateful for all of the organizers that they made it happen. Impact Ventures is a Hungarian-based social impact venture capital fund. Social impact means for us that we are investing only in companies which can produce a measurable and massive financial result and a primary direct social impact as well. So if we are talking about investing in social ventures, companies, SMEs, which are providing social impact as well, it means that we are investing only in companies who can measure the impact what they are providing. We are 21 million euro small fund. It's 10% of impact ventures partners or less than. So we are extremely small, but we are an early follower or an early bird in Hungary, and we are an early bird in Central and Eastern Europe, especially in the V4 region. So we are trying to build up the ecosystem and the market itself, and it's not easy. We have a European mandate. Half of our portfolio we are investing in European countries. We already invested in Netherlands, in Austria, in Malta, and in Italy. And the other half of the fund size we invest in Hungary. We have 5 investments already in Hungary. We filtered more than 2,000 companies in the last 2 years, and we invested altogether in 9 companies. That shows that the Hungarian and the Central and Eastern European market is really immature. So from one hand, it gives us a good opportunity to, to find the best shots. But from the other hand, we have to spend a lot of time and energy to develop the market, to teach all of the entrepreneurs what does it mean that they are producing a social impact, how they can measure it, and how they can actually communicate that as well. We have a small fund and we have a bigger fund, but that's not as important.
Perhaps we go into, we'll leave the floor to José so he can present himself, and then we dive into the topic. That sounds good to you?
That's perfect. So cut it short. We are backed by EIF, thanks to Cyril. It was not a short journey, but just for one important feeling what I have, that after we signed the contract with EIF, 2 days later, Cyril come back to me with an email that, hey, Elemer, there is an impact fund which is developed in Croatia. Would you be so nice to help them, to teach them how they can do this? So I think this whole impact investing idea is not only a financial instrument, which is, no question, but it's furthermore, it's an educational tool. And through this educational tool, we can create a better European environment for impactful companies as well.
Thank you, Elemer. Thank you. José?
Thank you very much. I also have a presentation. If you can put my presentation, José Moncada, Bolsa Social. And I'll try to be very brief. So first of all, thank you very much to the organizers for inviting me. It's a pleasure to be here with this fantastic panel. So I'm going to introduce myself and Bolsa Social very briefly. My name is José Moncada, and I'm the founder and CEO of Bolsa Social. Bolsa Social is 2 things. There is an equity crowdfunding platform that was created in 2015 in Spain. And it was the first to be authorized by the national local authority. And we are focused mainly and devoted totally to impact investing. So we put in contact social enterprises that are in early stage with impact investors. They're professional and retail impact investors. And that is the beauty of the online participative financing platforms, that they are very democratic and very transparent, so that retail investors can also access to impact investing. That is one part of Bolsa Social. In 2019, we created a fund, an impact investing fund, with 22 million euros. We launched it together with AFI, which is a financial consultancy firm in Spain, to invest again in early stage social enterprises in Spain and Portugal. So far, we have conducted 8 investments, and with the platform we have created a community of almost 8,000 people that are investing in social enterprises, and we have closed 25 deals, and we have managed to channel 6 million euros from more than 1,000 retail investors to these social enterprises. Now, recently we launched a crowd lending line in the platform. The crowd lending line is providing for sustainable loans for social economy entities. These are not startups, these are more grown-up companies that are capable of repaying back the loan. So, in essence, this is Bolsa Social. I had a presentation, but since there is no presentation, there is no need for it, because I already presented it.
Thank you for your sense of adaptation, José. But In any case, I'm very happy, and perhaps the first bit of this discussion should be around your understanding of what is an impact company and how different is an impact company from a regular or company first, and also within that shed light on your strategy to achieve impact and invest and back meaningful impact companies. The reason why I'm very glad we are having the panel with you on the panel today is that each of the panelists here are pioneers in their spheres very much. Impact Partners that you represent, Astrid, is certainly one of the very first mover in Europe, and today one of the largest impact fund operating in Europe, across Europe, with 120 million for the latest fund, if I'm not mistaken, and certainly even going higher at final closing, which is remarkable, having in mind how impact investing started. Elemer Impact Ventures is the first impact fund in Hungary and more broadly in Central Eastern Europe. So also you very much steered the momentum for impact investing, and we see that it's gathering fruit. You mentioned the kind support you provided also to Feels Good in Croatia, that has now been able to close as well. And José is one of the very few investment platform to combine a fund capacity with the crowd, so both nurturing from each wisdom, let's say the wisdom from the crowd and the wisdom from investors, that I'm sure prove very complementary, and we are keen to hear from you. So perhaps, José, if you'd like to start and again shed light on what you deem being impact through your own experience.
Yes, thank you very much, Cyril. This is a question that I love to respond because it's what is moving us, no? What is moving us? What is impact for us? Impact investing is looking to invest in companies that have a mission, that have a transformative mission, that they are born to solve one of the key challenges that we have in society. And they are born to solve that challenge with a practical solution that is scalable and is, of course, sustainable and profitable. So in that term, or in that sense, we focus on five areas where we think that there is impact. No? And now I connect with the strategy, how we invest. There is all of these areas are very well framed in the 17 United Nations Sustainable Development Goals, and we have identified 5 areas where we think we can provide input and help to produce impact. First is health and well-being. When we talk about health, we are not talking about just investing in pharmaceutical companies or something like that. There's a lot of money for that. They don't need our money. No? So we are investing in well-being and situations of health issues that have a big social impact. Like, for instance, we are very concerned about the aging population in Europe. So in Spain, we are the 3rd oldest country in terms of aging in Europe, and by 2015 we will be the first with more the biggest dimension of elder in society. So we need to ensure that this elder get a very good and decent life. So we take care of them. So we are looking for technology because this is a big challenge for us. How do we take care of our elder in a very decent and manner and with quality for them, with dignity? So looking for technology that humanizes the treatment and that can help us treat better our elder. No? And like that, we have, maybe later on we can present some examples of companies that we have invested in. Why technology? Because we think that we only invest in companies that we think that they can be scalable, so that the impact is scalable. And technology is something that really makes things grow. The second sector that we are interested of impact is education, inclusive education, and education of quality. This is one of the most important areas that I would say of investing, of impact investing. It's not just, it's not easy. We have to look for solutions that not that are just in the educational system, but that they are providing a solution to make the education of better quality and more integrative of all the students. The third area where we invest is in sustainable production and consumption. We are coming from a system that is linear, that is unsustainable. We know this. We are flooding the oceans with plastics. The system, there is no, I mean, it's no capacity to continue with this model in the globe. So we need to change it, and we are looking for sustainable solutions, more sustainable solutions. Like, for instance, we are very interested in sustainable agriculture, and later on I'll give you one example of a company that we invested in. Or sustainable fashion. Fashion is the second largest polluting industry in the world after the oil industry, which is, when you start to look into it, it's crazy. So we need to change the system by which our clothes are produced and sold. So we are investing there. The fourth area is everything that has to do with climate change. We are living in a climate urgency, an emergency, and we need to again contribute to reduce the global warming. So we are looking for solutions that are changing habits. It's very important for us to change habits in transport and the way we build cities and so on. And finally, we invest in companies that in a nutshell, they have a solution for more social integration, or for more cohesive social integration. So taking care of vulnerable groups, providing solutions for them, and so on. This will be the thematic areas that we focus on. In terms of a strategy, and I'm going to focus now on the fund only, in terms of a strategy, we basically go for seed, pre-seed, and pre-series investments, equity investments, always in minority stakes, where we invest tickets in between 200,000 and 1 million euros, with the idea to be able to follow them up with half of the fund that is devoted for follow-up investments. As to the platform, which is a separate entity and with separate teams and separate investment decision processes, we invest in even earlier stages, rounds in between 100,000 and 500,000 euros. For us, impact investing, and with this I will finish, is investing in transformation, in social transformation, companies that are profitable, but at the same time they are transformative and are bringing solutions. So looking for solutions, and that is what differentiates us from ESG investing or other conventional investing. And that's why for us and for our investors is extremely important the measurement of the impact that the companies in which we invest is producing, because what we are proposing is a new concept of profit, an integral concept of profit, not only financial profit, but at the same time, and alongside it, social profit. But I think we will talk about that later. Thank you.
Thank you. Thank you, Jose. Elemer, will you contribute?
So I'm in trouble because actually our fund is similar than Jose's fund. So I don't want to waste your time to repeat Jose's.
We have plenty of topics to touch in any case.
So wait, maybe one thing what is extremely important for us, that we heard many debates about this question, that which is more important, impact or finance? So many times we had the chance to hear this debate and to hear arguments that, okay, impact first, no, finance first. And impact ventures' philosophical approach is no, nothing is important than the other one. So impact and finance are equally important. We believe and we invest in companies where impact measurement is as important and as professional than the financial measurement, which is obvious, but that by every company it's important. And with another word, for us, impact and finance, impact and financial production outcome of the company is equally important. So in our investment politics, that this is the main philosophical cornerstone of our investment decisions. From the other hand, what Jose mentioned as well, that we are investing in companies who cannot get money from the normal VCs. That's important as well. So if we see a good impact project, and if we see another good impact company, and if we see that one of them can get money from a normal VC, and the other one cannot get money from a normal VC, then we choose those one who is not capable to get money, get equity from another VC fund. So that's something differentiating. Maybe what is important as well, our strategy, we are sector agnostic. So Jose mentioned 3 different sectors where they are focusing. We are sector agnostic. It means that we are opportunistic. We are looking for every companies. As I mentioned already, because of the unmature type of the Hungarian market, we have to be sector agnostic. From the other hand, we are focusing on education as well. Education is extremely important for us, and we believe that the new structures and the new approach of education is necessary for the whole European culture. What else, my friend?
That's a good overview. I mean, it's also good to when asking the question, and Astrid, you'll provide your answer, it's important to stress that, and perhaps it's a question up for debate, but at least in my view, impact investing is not a sector as such. It is way more of an investment strategy and a way, how do you incorporate impact targets in your due diligence? How do you take into account and try to value those when making your investment decision? Obviously, that's a very strong differentiating factor. That helps, again, differentiating in what impact investing from tech investments, for instance. So, Astrid, will you share your definition and strategy?
Could I have the presentation? It's the black one, the gray one. But I think it's actually a very good point that you raised about impact versus finance and financial results. And in fact, I mean, the first thing is we do not invest if there's not a social impact. We don't invest. And in the past, we've been investing in companies which didn't have yet a social impact, and it didn't prove to be a good solution to do so, because sometimes the social impact never happens, and then it means we need to go and exit the company. So now today, and it's also maybe because we invest later than you in later stage companies, we always make sure that when we invest in a company, there is already a social impact. If there is no social impact, we don't invest. And of course, we need financial results, because otherwise there is no sustainability in the impact that you bring.
That's the main point.
So this we already talked about it. I wanted to share this slide because last year we actually structured our social impact strategy. As I was saying, at Impact Partners, we have 3 verticals: local, social, and green. But I'm going to really focus on social impact. That's the growth fund that I'm working with. And actually, we have one purpose. It's really to make our society more fair. And to do so, we want to fight against social inequalities. And because now we are investing in different countries in Europe, it was very important for us to, as a team, have a common understanding of what is social impact. Why is that? Because in some countries, and it's normal, you can have social challenges which are very local, and that's a result of politics of the local country. But there are some challenges which are actually the same across Europe, and we think it's actually interesting to look at those, because it means that then we can scale in Europe with these companies. So we did a little exercise of actually, crunching the numbers and looking at what are those social challenges, what are the sources of social inequalities in Europe, and actually there are 3 big verticals, and I think we already talked about them, but we came back to the same result. There are 3 big verticals. One is really about learn. The second one is about work. And the third one is what we call care. It's not only about health, it's a little bit more wider as a topic. But yeah, these are really the three biggest themes, I would say, where there are a lot of social inequalities. And within each theme, we actually looked at different targets, such as the youngsters, the adults, the seniors, because they have different problematics, different inequalities in these thematics, and we listed all the different topics that exist. So we had like 20 topics for example, learn youngsters. We had like 20 topics, but we really, as a team, tried to understand which are the most common ones. So here I only listed 2 of them because otherwise the matrix would be just not readable. But for example, learn, all around Europe, we know that school dropout is an issue, job orientation is an issue. For adults, functional illiteracy, professional training. For seniors, you have neurogeneration and how you can, come with solutions so that seniors can learn, get their brain working to go to fight against that. Access to culture. Well, I'm not going to go through all of them, but I think care is an interesting one because care is about health, but it doesn't mean it all needs to be about health solutions. It can also be product solutions. It can be services like housing. So, but this always linked because at the end, autonomy loss, for example, is linked to a lot of different topics that needs to be addressed, and it's not only about health, and that's why we call it care. So to make sure it includes health, services, and products. And when we actually look, so now you've seen our matrix, so that's our strategy. We try to invest in companies that have a social impact in one of these big themes. But when we are going to measure, and we'll talk later about measurement, but we always look at, when we talk about inequalities, it means you need to have a target population. It's not about education for everyone. It could be education for people, for children that come from deprived areas. It could be education for dyslexic children which have difficulties to go to a normal school. So voilà, we always try to find a target population, and later on we'll talk about measures, but that's how we then measure our impacts, by really crossing the thematic with the target population that has a social inequality.
Thank you for sharing, Astrid. So it's interesting to see, and we could already hear that between José and Elemer, there are already a common points in the way you define impact, which in a way is reassuring, because even if it's always a heated debate around what is an impact company and what is not an impact company, I think still today, 2021, there is no overriding consensus in the industry around that, and I think that explains also why we come up with very different figures, large figures. I don't know if you've seen the GENE report, the Global Impact Investing Network report. They do every year a market study trying to quantify how many assets are at use available on the market for impact investing. They come up with very different figures because that ultimately depends on what do you assess as being impact investing. Is ESG impact investing? We have our views on that, and the way we go about it also at the EIF, and when screening fund proposals that come to us, we are trying to define the impact as follows, or an impact company or an impact strategy as follows. First, and it's not trivial, intentionality. I mean, we are in a conference where purpose is a big word right here, and I think never underestimate the fact that those companies are founded by mission-driven founders, which means, to put it this way, at least it's my view, and I'm happy to hear it can be argued, obviously, but venture company, the enterprise, is a mean to achieve or address a social or environmental issue. So the intention behind the way the business model is set up is crucial and very important, because it is a very strong differentiating factor from an impact company to any given company. And obviously next to it you have much more common features like scalability, profitability. We are in a remit where it's about investing, it's about creating value, social and financial value. So those topics are obviously also very important. This is the role of an entrepreneur as part of the civil society to step in the debate and next to policymakers, public bodies, private, large corporates, also forge and propose a solution to an identified social and environmental issue. So that's why I'd be keen to hear from you also, how do you quantify, how do you measure impact? I'd like to start this with saying that, again, this is our view and we take it with humility. We do not claim to have the monopoly of what is or is not impact. But one important thing, I believe, to differentiate ESG investing and impact, for instance, is that, and again, no judgment here, I think we are on the same axis, but perhaps with different intensity. ESG, microfinance, microcredit, impact investing still all belong to a global movement that is very much around making sure that finance has the right purpose. So, the fact is that I would certainly qualify ESG as some kind of transparency commitment to your investors. It's a commitment not to do harm and a commitment to openly, transparently, how does my investment activity translate into, what are their consequences on environment, social, the governance aspect? This is ESG. Impact investing is not about not doing harm. Impact investing is about using technology at low or high intensity to address social and environmental issues. So it's about proposing a solution to an identified issue. And because of that, I'd be curious to hear how do you quantify that? How do you measure that? And to stop here, when we invest in an impact fund, and you know that, that often also triggers interesting discussions, but we do not see impact measurement as a reporting requirement. It is not enough in the impact world. It is way more an alignment of interest tool. In other words, in the regular economic world, if you achieve certain objective and you beat or achieve your financial objectives, then there are incentives. In the impact space, it is not enough to meet your financial objective. You also have to meet and achieve your social or environmental objective. I think this is one very strong differentiating factor between impact investing and normal investing. I'd be curious to hear from you how you approach it, and don't know who want to start.
You want, very briefly. Indeed, and that is the key difference, no, between ESG and impact investing. And we are not saying one is better than the other. No, it's a different strategy. And you said it's not an asset, it's a strategy. It's a strategy, and it depends on what is your purpose. What do you want to do with your money? That is the key thing, no? In ESG, being quite reductionist, it would be investing in things that do not harm or harm less. Whereas in impact investing, and because of that, I would consider microfinance probably part of impact investing, but that is my personal view. It's just investing with the purpose of bringing in solutions. You said it, solutions. We are looking for solutions. And that is the big difference. And then we can debate longer and longer. So, and that's why, as I said before, the impact investor has a different meaning of what is profit. Profit for the impact investor is IRR, of course, and that is a percentage that you want to agree with your investor. A different question is whether there is a concessional return in impact investing. I think there should be, but it is my personal view. And plus IRR, there is the transformation you have produced with your money. And that, in order to measure that, and that you have to measure and you have to show. And as Cyril said, this is not just a reporting thing. It's an essential and fundamental element of the impact investing. Because it's not a question of just reporting, but also managing the impact you want to produce. And you measure it because you want to manage the impact. How do we do that? We just follow the standards that there are. I think there is plenty of discussion about methodologies to measure impact and so on, and there are different methodologies. We just choose the one that the European Commission mentioned as the highest or the best standards in terms of impact measurement, which is the EVPA standards, the standards of the European Venture Philanthropy Association, which we are members since 5 years ago. And we adapt it. And basically, what is it? We have to, for each of the companies that we invest, we have to define what is the problem they are addressing. In the problem, we have to identify the beneficiaries, and I'd like, Astrid, the way you approach. Let's go first, the people, what is the problems, and then let's define the solutions. So define the beneficiaries, that's very important. Then, knowing the problem and the beneficiaries, identify what is the purpose, the goal, the objective, the transformation, the objective of transformation, the impact. In order to measure that, we decide, we set at least 3 indicators. Choosing the indicators is an art, because they are different for different companies. They have to be meaningful, they have to be measurable, meaning easy to measure, because you can break your head with impact indicators. Have to be easy. You have to understand that we are investing in very early stage companies, so we cannot create something very complex for a small team that has to devote a lot of efforts for, or energy for that. So easy, but at the same time meaningful of the impact. And these indicators, what we do is we set with each of the companies that we invest in goals, annual goals of the indicators. And I will later on, maybe when we talk about real examples, we can go to what kind of indicators are we using for each of the companies. Quarterly, they report to us the impact that they are achieving, and yearly we check with them whether they have achieved the year goals of impact that we have set with each of them. And in order to align interests, the variable remuneration of the CEO of the companies in which we invest is linked to the achievement of the impact goals. Also, in order to introduce integrity in this process, since it's just a reporting from the company, we ask for a third independent party to audit the impact results that have been reported to us. And that is, I think, serious manner to approach impact measurement and impact management. No? We also incorporated to the system the advantages or the different characteristics of the so-called impact management project, the IMP, which is another approach to impact measurement that has its merits, and we are adapting our approach based on the EVPA standards to the IMP. So in a nutshell, that would be the way we measure. Thank you.
Thank you, Jose, being mindful of time as well and make sure everybody has the chance to mention. Astrid, Elemer.
Okay, that's a super wide issue, and thank you so much, Jose, that you mentioned already what we are considering as measurement as well. But make a step backward. That there is always a debate as well that how to measure impact and what is impact measurement, and if I'm trying to explain what is impact investing for a group of people who never met with the phenomenon impact investing, mainly the smartest members of the group are always asking it, how do you measure? And that's no question that measurement is a crucial issue of our whole mission. Without measurement, and I go forward a bit later, without measurement, impact investing will be only a single marketing tool, and actually we can flip the thought what Uli Grabenbarter was mentioned, that we hope that on a later stage what we are doing will be not an alternative form, but this will be, so impact investment will be a majority of investment, and if there is no measurement, then we can throw in the trash this idea. So without measurement, impact investing is only a single marketing tool, and there will be no impact washing. Everything will be only an impact washing, and it generates a really difficult question, what is related with Astrid's thought, that it would be extremely good to measure impact as we measure the financial return. It would be great to have a common sense and a common understandable methodology and outcome of impact measuring. But honestly, and I already realized this, in the small or in the early phases, it's impossible. And therefore, ESG is so successful, because ESG is mainly investing in companies which are public listed. Hey, that's not a problem to measure their anything, but it's really a problem to measure, and extremely a problem to compare the measurement in the early phases. As Jose mentioned, we are doing the same. We are defining KPIs, and no more than 3 if we want to survive. And we always following the numbers of these 3 KPIs. And actually EIF is approving this methodology. But the missing part, and I'm always thinking about, how can we lower and lower the level where we can have a comparable measurement system and the common sense outcome of our measurement. So I think measurement is an issue, is a huge problem, and in case of the early stage impact investment, I'm really afraid that there is no potential to have a common sense measurement system and outcome. One more important thing of this whole impact story, that I had many discussions with politicians, and you probably know that in the UK there's a huge fund of funds called Big Society Capital, which was actually pushed through by the Cameron administration. So there are politicians who realize that impact investing could be a tool, or can be a tool for the governments as well, because it can solve local problems as well. But the main problem of the politicians with impact investing, that it cannot solve huge problems. So when I had some discussion with some Hungarian politicians, and they said, okay, can you feed all of the Hungarian kids? And I said, no, I can feed in one village or in one city the Hungarian kids with a company, and they said it's not a solution for me. So that's one. Next to the measurement issue, this issue is important and extremely a good example as well, that it's not easy to measure and not easy to find the critical mass which is relevant, for example, the political decision makers.
Thank you, Elemer.
Yeah, so a lot of things have already been said on measurement, but I just wanted to add a few things. What we try to do is being very pragmatic. When you measure the impact, when you want to measure the social impact, we focus as well on 1 or 2 KPIs maximum, because we need to be pragmatic, and we always make sure that when we invest in a company, the impact, the social impact, is by design. So that makes things a little bit easier in the measurement. So typically, I'll give you an example. We were talking about education, learning. So if it's a school that enables these dyslexic children to be able to have an education, the measurement will be about how many dyslexic children will have an education in that school. Very pragmatic. It's based really on the social impact, which is by design. So voilà, that's what I wanted to add, being very pragmatic. Another point I wanted to add is, for us, and you've understood, I think, social impact is really important. We don't give objective to the founders on the social impact, because we think that they have a lot of things to manage anyways with their business. But we always make sure that there is intentionality, because if there is, they will be doing, and if it's impact by design, they will be doing, everything. As the business grow anyways, the impact will grow. But we, as investors, all the investment team, we do not get our carrot if the social impact is not achieved. So it's you get it if the social impact is achieved, you don't get it at all if social impact is achieved, even though there is a financial result. So both financial results and impact should be achieved for us as the investment team to get our carrot.
Just one important thing what I want to highlight once again for the audience, that if you do not have financial return, you cannot have a sustainable impact. So therefore, I think, and we can agree in this point, all of us, that we have to invest in companies which can provide a massive financial return to support and to keep the sustainable impact. So I think that's important to know, that there is no.
Thank you for sharing, all of you. It's an important point you make, Elemer. I think one. We also need to reckon that finance as a whole cannot be summarized by, I don't know, the role of large banks, for instance. Finance is like the blood in the body. You need money to circulate, to irrigate, and eventually foster social innovation. So finance should not be ideologized in some way. But what is important in impact investing, I believe, is that also to put forward a principle that value creation, financial value creation, is a mean to indeed make sure the impact is achieved at scale, and certainly not an end. So, so thank you for sharing your experiences here. We're running out of time, and I see, Neoclis, you're keeping me, keep us in mind that we have 5 minutes left. Out of these 5 minutes, I'd like to, and I hope with this we already answered a number of questions that I see popping up on the screen and that were shared by audience here or online. Could you please, to illustrate your strategy, your measurement, your role, and how you see yourself also going forward, could you please identify or point out to one clear success story that makes you proud, that also illustrate what impact investing means? So I don't know if by any chance you have an example of a company. That's a question on the screen. So what innovative solutions have you invested so far for an increasingly aged population in Europe? And the demography is certainly one of the major challenges we face in Europe. I don't know if by chance you have in mind and you're able to improvise out of your portfolio and single out a company that does that. Otherwise, happy to hear from you what kind of success stories you'd like to highlight. Astrid, would you want to start?
Yeah. Well, I have one in mind, but I would prefer to talk about another one, because we just did the exit last week. So it's a company called Webforce 3. It's a coding school, and it's a coding school for people that that come from difficult professional backgrounds. So what they do is they have a program that lasts 3 months, and that really helps people with difficult professional backgrounds to be able to learn to code and then to find a new job. So I wanted to talk about this because we just exited, and it was and it's a good exit for us, because the company, when we invested in the company, had 3 schools, and now there are more than 50 schools all around France. It's a pure French example. The revenues have been multiplied by 12 in 5 years. So that was a very good financial return on that one. And most importantly, in terms of social impact, 2,789 people were reintegrated professionally. So when we invested in the companies, the increase has been of 2,709 people that have been integrated professionally. So I'm super proud to be able to share that with you, that nearly 3,000 people found a job thanks to that company.
Hats off for that very nice example indeed. Thanks, Astrid.
Just really quickly, we invested 2 years before in a company called We Love What You Build. The company is trading on the secondary Lego brick market. Lego brick is important because there are builders who are generating and building individual Lego statues or monuments, and they need the Lego bricks, the non-used, brand new, but not by the Lego traded Lego bricks. There is a huge market. There is a Lego stock exchange in Europe. The turnover is 200 million euro per year, so it's a lot. But the social impact and the important thing, and one more general idea, the people who are packaging out and in and shipping and making the whole logistic of this Lego brick thing are people with autism. And this is the point where I want to highlight one more thing, that for me or for impact ventures is extremely important, that the impact and the business need to be in-baked part of each other. That's a phrase from Ananda Ventures. In-baked part of each other. So why is in-baked part of each other the business and the impact? Because actually those autistic people are happy with this movement to move these small bricks in a clear environment and to have a monotone but a fixed job. They are happy with this. And the company, the employers are the perfect employer for this type of activity, because they have a highly high monotony tolerance, and to package in and out Lego bricks and to select Lego bricks, that's an extremely monotone job. So therefore, in this case, the financial result and the social impact are in-baked part of each other, and I think that's really important. And this is a good success story. Unfortunately, we did not exit from this company, but I hope that we will on some stage. Jose.
Thank you very much. Very quickly, it's difficult to pick. It's like choosing between your kids. No? Who's best? This is difficult. This is difficult. One probably that we are very proud of, precisely because it was one exit for the platform, and that benefited all the retail investors that supported this company. It's a company called Nostoc Biotech. It's a company that has created biofertilizers for the crops in Spain, and I think it's global. It's globally the case. There's a big problem in agriculture, because agriculture is quite unsustainable. There's a lot of chemicals being used, and they have devised solutions that are perfectly biological, and they managed to sell these products in the south of Spain, where there is intensive agriculture, and the investor of the platform managed to get an IRR of 40% of their investments, which is the positive thing of being democratic, no? Expanding as well the benefits, the financial benefits for the retail investors.
Thank you very much, José. Everyone, thank you also for questions raised and your attention for this panel. I liked very much our exchange, and I hope, obviously, you leave this session with more clarity around what is impact investing, what is an impact company, what's the role of measuring impact in this space, and happy to take follow-on questions in the break we're having right now. Thank you. Thank you, Neoclis.